What is going on, everyone? In today's video, we're going to be going over some trading rules and trading tactics that we as investors should be following and should be using on a daily basis to maximize our profits and to minimize our losses. So first, I want to start off by reading out each single one and then going through each single one independently. So the first one we have here is risk management. Second one, trade high probability setups only. Third one, create stop losses. Fourth one, do not enter anything within the first 30 minutes of the stock market open. Fifth one, we will not have more than 2 trades open at a time. Sixth one, take profits when we have a nice gain. Seventh one, control your fear of missing out. Eighth one, no earnings plays. Ninth one, no swings during choppy news markets. 10, no impulsive trades. So let's go through each single one individually, one by one, so that you guys can get familiarized with them and start incorporating them into your own trades. So the first one, risk management. You should always have 80 to 90% of cash on hand. You will be required to only spend 10 to 20% of your portfolio at any given time. So guys, this is very important to follow. You only lose as much as you put in. If my account is $10,000, I put in $10,000, I can lose $10,000. If my account is $10,000 and I go in with 20%, $2,000. Now, understand this. Options are used to leverage your money. So if you have $10,000 and you put the $10,000 in, you're risking that $10,000 to gain $2,000. But now let's say you follow these trading rules, you go in 20%, now you're going with 2,000 out of 10,000. Now you're using that small amount of money as leverage for bigger gains. Now this 2,000 can get you 4,000, 6,000. Using small amounts of money for big returns, leveraging your money. Options is about leveraging a small amount of money. You should not go in below 100% of your account because, like we all know, the markets are many times unpredictable. Anything can happen and you can lose all your money. So please, 20% of your account max. Number 2, trade high probability setups only. What does this mean? This means that you should only be entering trades with a lot of technical analysis or great news behind it. So let me give you guys an example. Let's look at a bull flag pattern. This here is a high probability setup. Bull flags, high probability setup. This is an example of a high probability setup. We have a flagpole, we have a flag, and then we have the continuation. Okay? So why is this a high probability setup? Because bull flags are more inclined to break on the upside. This is high probability. If we have this bull flag, it breaks here with volume in accordance with the S&P 500, and we enter here, you are so safe. If this bull flag breaks here with proper volume in accordance with the S&P 500, but we break here, we enter here, that's high probability because it broke from a bull flag. Okay? So this is an example of a high probability setup. Pennant pattern, bull flags, ascending triangles, descending triangles, inverse head and shoulders, all these things are examples of high probability setups and things that you should be using when you are trading. So, and things you should be incorporating into your own trading. So all those were examples of high probability setups and setups that are very lucrative and can bring you a lot of money. Here's even another one, inverse head and shoulders. We just talked about it. So we have the left shoulder, the head, the right shoulder, and this is more inclined to break on the upside. With a clean break here with proper volume, we'll break on the upside. Boom. We have that break, clean. We have that clean setup, broke with volume, and now we have new highs or whatever it is, new daily highs, whatever, but we are more than likely going to the upside. So that is a good example. Number 3, create stop losses. What is a stop loss? A stop loss is a manual setup you can incorporate into your options trading to minimize your losses. A stop loss is triggered when it is hit by 25 to 50%, depending on your own preference. A lot of people do 20%, a lot of people do 50%. A lot of people meet in the middle 30%, but the main point is to minimize your losses by cutting at a certain percentage. So that is what a stop loss is. Lesson 11. In our course, lesson 11, we'll go through all the stop losses that you need. Lesson 11, Lesson 11 in our course goes through everything you need to know about stop losses. It has PowerPoints, it has videos, it has everything you need to know. So please go through lesson 11, learn about stop losses. Number 4, do not enter anything within the first 30 minutes of the market being over. Now guys, this is speaking from experience and speaking from just the basic truth, okay? So when the stock market opens, it has to choose a direction. It has to choose a direction, okay? Now, nobody knows what the stock market is going to do the first 30 minutes. First 15 minutes, nobody knows, okay? So always wait 15 to 30 minutes. 30 minutes, I feel like that's a lot, but 15 to 30 minutes is, I think that's when the stock market has chosen a direction and when it's going to be ready for opportunity, okay? So please, always wait 15 minutes before entering anything, okay? Because the stock market has to choose where it wants to go. We can't choose for the stock market. The stock market has to take everything in consideration, all the news, everything, and formulate that into the proper price for a stock. So do not enter anything in the first 30 minutes. Let the market choose a direction. Let all the beginners, let all the people that don't realize this, let all them lose their money so that you can take advantage of that and take their money. And as dark as that sounds, whatever, but please don't enter the first 30 minutes so you can be safe. Number 5, we will not take more than 2 trades open at a time. Now this is different. If you guys are swing trading anything, I recommend no more than 3 positions, okay? 2 I think is a little far-fetched, but if they're day trades, 2 max. Because let's be honest, it's super hard to babysit 3, 4, 5. If you're day trading, you're gonna sell those the same day. It's so hard to babysit that. Just go 1 and 2 and just focus more on quality. If you're thinking about doing more trades, focus on quality. Focus on a good setup. Focus on a break with volume in accordance with S&P 500. Focus on everything nice, okay? Instead of doing 5, do 2 that are going to be beautiful setups. Number 6, take profits when you have a nice gain. Okay, a lot of the time people message me, hey, hold on, should I sell? And they're at 400% profit, 300% profit. Guys, whenever I'm at 100% profit, I always cut it in half and hold for free. Always. I'm not going to risk my own money, okay? So always think to yourself, how can I make this free? How can I reduce the risk? The key is to conserve your capital for the long run. So please conserve your capital as you go. Control your FOMO. Number 7, control your FOMO. Fear of missing out. A lot of people, they rush in. The stock's done moving, yet they still rush in. Why do you think this is? This is because they have a fear of missing out. Opportunities will always come and go in the stock market. So don't feel forced to chase something, okay? Never feel forced to chase something. Always let opportunity come to you and go from there. Don't chase anything. Don't overpay. Don't do any of that. Number 8, no earnings. Now this is optional, okay? Sometimes I play earnings with profits, but most of the time, earnings are 50-50. If we gotta be honest, earnings are 50-50. So if you're feeling like you want to gamble with your profit or something, then go ahead and do earnings. But personally, I do earnings 2 times a month, and I go in with profits. I would never go in with more than $1,000 on earnings. So number 9, no swings during choppy markets. Guys, this is very, very important to follow. If you're swinging during a crazy news market, there's a high chance you will get clapped. And now this is because anything can happen overnight. So like I said, if you're swinging, please swing with profits, and always follow your stop losses. Be smart with your money, conserve your money, conserve your trades, and take quality trades. Always take quality trades. Number 10, no impulsive trades. Always go in a trade with a game plan and go in a trade knowing what you're going to do. What am I going to do if it comes down 10%? I know what I'm going to do. What am I going to do if I'm up 100%? I know what I'm going to do. What am I going to do if it rejects support here? If it rejects resistance here, what am I going to do? Always have a game plan. Alright guys, so those are the basic trading rules that you should follow. Now, of course, on your own time, you can go through all of them, each single one, and be able to see what works for you, what doesn't work. Maybe you want to cut losses at 30%, maybe you don't cut losses, maybe you let it expire, maybe you cut losses at 10%, whatever works for you. Maybe you love earnings, whatever works for you, but just please take a But please take some time just to read over them trading rules. It's down at the bottom under terminology and acronyms. So please just take the time. Be smart. Stay hungry, stay humble, stay motivated. See you guys later.